Welcome to Elite Trading Radar. You know that feeling when you look at a stock chart and it just feels overwhelming? Well, today we're going to change that. I'm going to show you exactly how to analyze any stock with the confidence of a pro, and we're starting right now.
A bold promise? Yeah, maybe. But the goal here isn't just about being fast. It's about getting clear. We're going to give you a really powerful, repeatable framework that helps you cut right through all the noise and focus on what actually matters when you're looking at a company.
Okay, first things first, a really crucial point. This explainer is for your information only. It is not financial advice. I'm not your licensed advisor, so it's absolutely essential that you do your own homework before making any kind of investment decision.
All right, with that covered, let's get into the good stuff. We're calling this the 5-minute promise because this whole method is about being efficient and getting clear fast. It's designed to give you a really strong first impression of any company really quickly. So how do you find your edge when there are literally thousands of stocks out there? The answer is a proven step-by-step framework. And look, this isn't just theory. It's a super practical method that real investors use to quickly sift through the market and spot opportunities.
So what's the secret sauce? Well, it's not magic, it's a method. We're going to break down the exact 3-step framework that professionals use to get a quick, smart snapshot of any company.
Here they are, the 3 pillars. First, you gotta understand the business. Second, you check its financial health. And third, you evaluate its valuation. That's it. You master these 3 things, and you've basically mastered the fundamentals. Let's start with number 1. Step 1. Understand the business. Now, this sounds so obvious, but you'd be surprised how many people skip it. Can you explain simply what the company does and how it gets paid? If you can't, that is a huge red flag. The big question is, does this business make sense, and are people still going to need it in 5 years?
Okay, once the story makes sense, it's time to check the numbers. Step 2 is all about financial health. This just means a quick peek at 2 key documents: the income statement, which tells you about profit, and the balance sheet, which shows you debt. You're just asking 3 simple questions. Is revenue growing? Is it profitable? And is it buried in debt?
And finally, step 3, valuation. This answers the question, so is the stock's price actually fair? A really common tool is the price-to-earnings ratio, or PE. But listen, a PE of, say, 20 is totally meaningless by itself. You must compare it to the company's direct competitors. This is the most important part of valuation. Context is everything. All right, theory's great, but let's make this real. We're going to run this exact 3-step framework on a fictional company. We'll call it XYZ Corp, just to show you how quick and powerful this can be. Okay, let's run XYZ Corp through the checklist. First, the business. They make EV batteries. Simple, clear, it's a growing market? Check. Second, financials. Revenue is growing at 25% and debt is low. That's a great signal. Check. And third, the valuation. Its PE is 20, but its competitors average 25. Now that's interesting. That valuation gap is exactly what we're looking for. See how XYZ Corp's PE is noticeably lower than the industry average? This suggests it might be priced attractively. And just like that, in a couple of minutes, we've got our initial idea. A solid business with healthy finances that seems to be on sale compared to its peers.
And that is the power of this framework. In just a few minutes, you've done a high-level screen. You've cut through the static and found a company that actually deserves a closer look. You've separated the potential good apples from all the bananas.
Okay, so once that initial analysis gives you a yes, the pros add 2 more layers to their game plan. This is how you really level up and go from just analyzing stocks to investing intelligently. First, you have to actively look for the bad stuff, the risks. Check the news for any legal troubles, and this one's big, check for insider selling. That's when executives are dumping their own stock. Second, and this is totally non-negotiable for the pros, you have to master position sizing. That just means deciding how much money you're going to invest. You never, ever bet the farm on one idea.
So what does not betting the farm actually look like? Well, a core rule for a lot of professionals is this: never put more than 1 to 2% of your entire portfolio into a single new stock.
This simple rule is your ultimate defense. It means that even if you're totally wrong, you live to fight another day.
So there you have it. The framework, a real-world example, and a couple of pro tips. This is more than just a method, you know? It's a tool to bring clarity to your decisions. And that clarity, that's where everything starts.
So if this framework gave you that aha moment, that hit of clarity you've been searching for, here's what to do next.
First, subscribe now and be sure to turn on notifications so you never miss one of these power-packed breakdowns. Second, I really want to hear from you. Drop a comment below. Which of these steps surprised you the most? I'll be down there replying. Thanks for watching Elite Trading Radar, where smart trading begins and keeps you ahead of the curve. I'll see you in the next one.